Hello and welcome to our latest episode of Finextra Unplugged. Today I have the pleasure of speaking to a mainstay of Finextra, Andrew Smith, the Chief Technology Officer of RTGS.global and a co-founder of both RTGS and of ClearBank. Andy, thank you so much for joining me today.
Thanks for having me.
Andy is also an excellent and rather prolific contributor to Finextra. He now has even a dedicated series on the site, which really pulls through the technical side of agile working, which is very, very interesting, and I highly recommend a read. What we love about Andy is the fantastic perspective that he offers thanks to a vast experience in software development and IT. And given this experience and perspective, we thought that it would be interesting to speak with Andy on the much discussed, perhaps hyped topic of CBDC. So, for context, we know that various central banks are progressing and prioritising their work around CBDC, and certain countries, certain jurisdictions are perhaps further ahead in their timelines than others. We also saw a few weeks ago now that the Bank of England has announced a new task force to coordinate exploratory work on a potential CBDC, which is being led by both the bank and the Treasury. The task force, first and foremost, plans to coordinate exploration of the objectives, the use cases, the opportunities and potential risks that a UK CBDC may present. So Andy, what would you say, what do you think is the value of a CBDC? Are there certain use cases which are stronger than others?
Yeah, so I think the issue with CBDCs is comes down to use cases, to be honest with you. And there's definitely a variety of use cases that we often talk about, but you can really lump them into a wholesale or into a retail kind of category. I think depending which kind of way you want to look at it, or which use cases you want to follow, you end up with different challenges, different risks, different complications, some of them technical, some of them a bit more technical, but in the terms of economic levers. What does it actually mean for the commercial banks themselves? Can people still carry out the same sort of banking as they do today? So it does come down to the actual use cases themselves. I think one of the challenges you see is a lot of the hype and a lot of the conversations that we see, especially in the media and commentary that you'll see, especially from crypto fans, is that CBDCs are often touted to basically replace what are the payment systems that we have today. They don't really offer any additional value. There's no additional benefit to me as an end user. Rather, they come with a lot more questions around what does that actually mean. So, you know, the likelihood of me going in to buy a pair of, you know, Nike trainers or a record, God, I might show my age then, but a couple of things with my CBDC on my mobile phone, I'm not entirely sure that sort of use case is one that we'll see, you know, actually come to pass, so to speak.
And I mean, while there may not be clear benefits, perhaps, there is arguably potentially sort of a need, a necessity for central banks to start addressing this change, this shift in consumer behavior toward digital payments. I mean, do you think that CBDC is inevitable as a necessity rather than something that is just an attractive option?
I think it comes down to the use case. So one of the things you've got to look at is what kind of benefits will CBDC bring to the marketplace. If you're talking about speed of transactions, that instant payments, that instant gratification kind of being able to send money to your friends or your family instantly, then that's not really a big use case. You can't really warrant the investment into a CBDC for that kind of customer experience or outcome. If you're looking at it to say, actually, I'm looking at ways of de-risking the financial services sector itself, or the way that banks hold funds, then all of a sudden you can start to see, well, actually, there's a massive benefit here of a CBDC that is, you know, 24/7, instantly on, always available, and that is an enabler, therefore, for banks to carry out other you know, processes and functions they have to deliver to me as a consumer. So I think it, as I said, it keeps coming down to the actual use cases of where you want to go with a CBDC. But in my opinion, I think there's a massive role to play in terms of de-risking the financial services sector that we have, you know, adding additional resiliency to the core infrastructure, the underlying systems, And if you think about regulated banks, a lot of it is, well, you can't have a singular dependency on A. Do you know what I mean? So you can't just say, if I want to move money, it's just on chaps. Well, typically that's what happens though, right? If I've got a payment over a certain value, I have no other option but to make that payment through chaps. So if you introduce something like a CBDC, is there an alternative? So, you know, in the unlikely scenario that chaps was unavailable, it went down, or there was a problem, could I still make my, you know, my transaction immediately by flipping into a CBDC and then moving the ownership of that CBDC to somebody else? That might be an option. But again, it comes down to use cases, and you're starting to look at it. Well, how am I reducing risk? How am I reducing, you know, how am I essentially reducing risk and making everything a lot more resilient and stable?
And I mean, it isn't unheard of that payment systems go down. We heard about the Target system that went down at the end of last year, I believe, or middle of last year.
Yeah,
over in Europe, yeah.
So CBDCs could have offered maybe an alternative payment. If you're an American bank and you're trying to make some large value payments into Europe, you know, you were in a bit of an 8-hour window of pain, to be honest with you.
Oh yeah, quite the event. So I understand that RTGS.global is currently writing a paper on CBDC, of which you are a co-author. What prompted you to put the piece together, and what are some of the key insights that the paper explores?
Yeah, so I don't want to give away too much. It's supposed to be a white paper, we think, at this term that we'll release, but it may be in a different format. It doesn't necessarily have to be that kind of traditional white paper kind of a piece of reading. But, you know, to be honest with you, we've been looking at CBDCs for probably about 18 months. When we started out on the RTGS Global journey, we were very mindful that CBDCs probably had a role to play, and that different jurisdictions throughout the globe are at different phases in terms of, you know, investigating CBDCs or actually on an implementation journey. And as a global network, you know, we're a global liquidity network. We bring banks together. They act as the liquidity nodes, if you like, on the network. We facilitate something called a liquidity versus liquidity transfer. So that's kind of like a wholesale swap of funds, if you like. So there's clearly a role to play there with CBDCs in terms of adding value to the RTGS Global experience, or the platform that the banks can actually utilize themselves. But it's also around the other way. We've kind of looked at it and said, well, actually, if you have these CBDCs at varying stages in their development or evolution, is there an area where RTGS Global can help those jurisdictions embrace CBDCs sooner rather than later? Can they actually understand specific use cases better? Is there kind of like that iterative, if you go to my Agile series actually, so, and that iterative approach where you go, right, okay, what's my minimum step, my minimum viable product? What's that first step? Because CBDCs could be a massive thing. What's my first easy win use case, if you like, that proves the value of it, but it is actually giving back added value into, you know, my economy? So we think that RTGS Global's got a unique perspective around this, and we're going to publish that quite soon. And it's a two-way street. How does CBDCs help RTGS Global, but also how does RTGS Global help a world adoption, if you like, of CBDCs?
Well, I look forward to reading it. I'm sure it'll be very enlightening.
I'll send you a copy straight away.
Thanks, Andy. Rather than we're just shifting over to the technical side now. So rather than just considering, say, the political or the regulatory perspective of CBDC, what would you say are the key technical challenges that come with developing a CBDC? Yeah,
I mean, the technology, if you like, behind cryptocurrencies and crypto assets is pretty mature now, actually. If you look at CBDCs, it's usually a DLT based kind of solution, but it doesn't necessarily have to be. It more than likely will be, but it's, you know, you still got technology options. So I think each jurisdiction will make their own decisions around the kind of technology that underpins their CBDCs. In terms of the challenges, I think a lot of it is down to the questions or the use cases that you have and what's the outcome you want to deliver. If you're looking at retail with, you know, high volume, low value, that's a different technical challenge to something that's, you know, more wholesale, let's say, with high value but very limited volume. So, those kind of use cases where you want to go with that, would they be two separate types of CBDCs? That is a technical question that you could have. So from a technology point of view, there's nothing that's unknown. You're not walking into a world where you say, okay, we just don't know how to technically solve this. It's more of, we don't technically know what the solution is that you want, because we don't understand the business case, if you like, or the use cases that you're wanting to adopt sooner rather than later. So, that's where I kind of sit in terms of the technology front. So it's an interesting space right now. I think there are some other areas that you can, the most obvious one is ownership of a CBDC. Technically, how are you going to show who owns that CBDC? We know that crypto has, I'm not going to say struggled with this, but obviously it's an environment where commercial banks can't see that the crypto environment has hit the same sort of standards in terms of understanding your customer and understanding the risk associated with the ownership of those crypto funds. So it's a similar sort of challenge you'll have with CBDCs. How do I know who really owns those funds? Especially if you're going to walk away from a traditional use case, which is, you have a reserve account and that's owned by a commercial bank, or we regulate those guys. You want to get the flexibilities and all the benefits of a CBDC, so you're going to have to look at those kind of controls in a very different way, and that will obviously have a technical impact on decisions that are made around implementation.
No, that's really clear. And I do want to come back to digital identity, but before we get there, while you've addressed, the technology side, the technical side might already be established to a certain degree or a sufficient degree, do you think that central banks, there is a possibility that central banks like the Bank of England would be looking to partner externally with tech or fintech firms who have the ability to help deliver the product and the technology in a more efficient way than building in-house?
So I think the first thing to note is that the Bank of England and the regulators, the PRA, the FCA, they do often look outside of their own house, if you like, for the talent if they need to go and sort it. So I'm sure they will do that. I'm sure they've got the resources, plenty of resources at hand, and the contacts to be able to make sure they get the right kind of people in to make those sorts of decisions. I think there's no point reinventing the wheel. So as we've just said, if you're going to build a CBDC, there's kind of a bit of a trodden path there now, and there's a trodden path in understanding what that may look like. So I can see them partnering with certain technology providers and consultancy firms to bring that to life. But in terms of the ownership, I'd like to think that they take ownership and accountability of their CBDC's implementation. So even though you might be using a third party for that, it gets brought in-house. If you look at what the Bank of England or the PRA did with Chaps, for example, it's an external company, and now that's been brought under the umbrella of the B of E. So I'd like to think that that's a similar sort of thing, that CBDCs would sit purely with the central bank. So those partnerships are there really as an initiating starting point, to get you going. That does actually lead to other questions, right? So some of the things you said about technical challenges for CBDCs, understanding decisions that you make, right? Who's eligible to own a CBDC, right? That is actually something that when you look at the B of E and the task force and stuff, they're the sort of questions they're going to have to go out into the marketplace and source the right sort of people who have got insight into saying, well, this is why a non-domiciled resident should be able to hold a CBDC, or why an overseas bank should be able to hold a CBDC. They're going to have to go into the marketplace and really engage with the right people who can give them an insight into the benefits of a particular use case or the negatives of a particular use case. And that's before they think about really, can I get the resources to build this, or partner with somebody to build it.
No, that's really clear. Quite a complex situation to work through. Okay, and so coming back to digital identity, I want to circle back because I think that it's quite relevant. And a lot of people have raised, the need for a digital identity within the context of CBDC. Would you be able to explain in your own words why and how digital identity can and will play a role if a digital pound or a CBDC comes to fruition in the UK, and what would be the challenges that come with it?
Yeah, and again, this might come down a little bit to the implementation of your CBDC. So if you look at the way that fiat currency works, you have a pretty much in the UK a sort code and account number, and therefore if I'm making a transaction to you or I'm transferring value to you, it's based over those sort code and account number. In a digital currency kind of world, it's not so much a sort code and account number. You traditionally look at like a wallet. If you think of Bitcoin or you think of Ethereum, it's a wallet kind of experience. So it's who owns the wallet. Now, because a CBDC it's essentially a liability with your central bank. The central bank needs to understand who owns that wallet, or who's permissible to own that wallet. Now, how do they judge that you're permissible to hold that wallet itself? Now we know in a traditional sense, the commercial banks, they know your customer, they go through your due diligence. So when you get your nice sort code and account number, the Bank of England and the regulators are taking comfort that the bank itself, that commercial bank, is doing its due diligence. Now in the CBDC world, are you going to shift that onto somebody like the Bank of England themselves? Probably not, right? But you'll need a way of being able to make it as easy as possible for the Bank of England to still see directly who their liabilities are with, even if it's indirectly via a regulated entity such as a bank itself. So you're going to have an understanding of how digital identity plays a role in giving you that line of sight of who ultimately owns the CBDC. And as I said, crypto has kind of failed a little bit around that because everything works around the wallet, but understanding who owns the wallet is sometimes a little bit, let's say, overlooked when actually it's a key part of what you need to do. So digital identity has a real role to play in terms of the ownership aspect. I think it also has a role to play in terms of those people who struggle to have identity, if you like, in the typical sense. So if you don't have a passport, you don't have a driving license, maybe you're new to the country, how do you actually go and prove who you are, and then be able to hold funds at a commercial bank? I think Lord Chris Holmes actually spoke about that potentially the time has come that banks themselves, not banks themselves, or central banks themselves, should think about opening accounts for the underbanked or the underprivileged, if that makes sense. Now, in doing so, how would that work? I'm not saying it's a good thing that he's saying there, but if you think about that, the only way that logically could happen is if you could get some sort of digital identity and utilize that to be able to open those accounts and hold those balances, essentially with a commercial bank. So there's a massive role to play for digital identity, not just with CBDCs, but across the whole of the financial services sector.
Yeah, definitely. The financial inclusion piece has been quite widely discussed, and we're coming across it quite frequently in this context and others. Now, this question wasn't one that we discussed already, but I'm curious to know if you, sorry, wasn't one of the ones that we discussed prior, but I want to know if you have kind of a feeling about what you expect the European Commission to come out with. I think at the end of this month, they're making a decision or an update on the digital identity status. Do you think that it's going to be high priority, gung-ho toward delivering it, or do you think that it's going to take a little bit more time?
I think it's going to take a little bit more time. I think if you look at digital identity across Europe, but also here in the UK right now, right? So we're actively have got the government looking at digital identity and the trust framework that may back that up. I think what you're trying to see is there's not so much a centralized digital identity scheme as such, right? So if you think back to the failed national cards or national ID cards that we're going to maybe introduce in the UK, yeah, I can't see that actually coming to fruition anytime soon in the EU or either here in the UK. What I can see is a lot of work being done on, in terms of frameworks for commercial entities who can provide digital identities, or governments themselves who can issue parts of digital, what you could see as part of a digital identity being carried out. So I think the EU will probably push a lot more around, this is the framework, this is the trust framework, this is where we see centralized trust, this is where we see decentralized opportunities, this is how we can see these things interacting, these are some of the standards that we would point you towards. I can see that being something they look to try and get quite aggressive with and push forward with. In the UK, I've been a little bit involved in some of the conversations around digital identity here in the UK, and there's a lot of work being carried out, but behind closed doors a little bit regarding what does a digital identity trust framework look like? You've got a number of individual or the private sector provides digital identity solutions. How can they participate in a way that gives trust to us as the general public, but also could be utilised or leveraged by government or those public sector, and vice versa? How does public sector get involved with the private sector? But again, it's all around frameworks and trying to get this security element and the trust right, as opposed to I'm issuing you with a digital identity. There you go. It's on your phone and it comes from the government. It's a very different thing.
That'd be nice though.
Would it? I don't know. It depends what your concept of a digital identity is. So I think just briefly, people think digital identity is like my passport. Well, my passport is my passport. It's not. It's an identity document. It's not my identity. So if you think of identity, and this would apply to how you have to apply this to CBDCs or anything. My identity as Andrew Smith is made up of a wealth of credentials that I hold. My passport, my driving license, my bills from BT, my Sky bill, but all sorts of things come together. Even my gym membership can be used to say, well, this is identity. I identify with you because of X, Y, and Z. If you think of identity like that, your digital identity is not one thing, it's many things. It is a domain of these credentials. So even if the government issued you with a digital identity per se, it's only issuing you with a particular type of credential, which may be only useful or valuable to you to access a particular service online with gov.co.uk. It wouldn't get you into your gym, for example. But we often think that digital identity is kind of like this universal credential that I can wander around with, and it really isn't, and it really shouldn't be seen like that. And if you wanted to go to that world, then that's actually quite a dangerous world, because privacy concerns, correlation, all the sorts of information that I could glean on you just by the relationships you have, because you're sharing that singular universal credential, is horrendous. And that means we know that identity has been abused in the past globally. We know that fraudsters, if they got hold of your identity now, it's quite tough to unwind that. Imagine that in a digital world. So in a digital identity world, we have to think of these things as individual credentials, as a domain that's owned by myself, and we have to think of privacy front and center.
Well, perfect. I think that's a great note to finish on, even though it was slightly sort of adjunct from the CBDC topic, but interesting nonetheless. Thank you so much for the chat today, Andy. I really appreciate it. It's been fantastic. I look forward to reading the paper from RTGS.global.
Yeah, hopefully you haven't got long to wait.
Fantastic. Thank you so much.
Talk to you soon.